The year 2025 was marked by a significant monetary policy easing as the Reserve Bank of India reduced the repo rate by a cumulative 125 basis points, equivalent to 1.25%. These measures were undertaken in response to strong economic performance and persistently low inflation. In spite of the global economic challenges, India demonstrated resilience, registering growth rates of 7.8% and 8.2% in the first and second quarters of the current financial year, respectively. Retail inflation remained below the RBI's lower tolerance limit of 2%, thereby enabling the central bank to reduce interest rates to support borrowing and stimulate domestic demand. The repo rate is the rate at which banks borrow from the Reserve Bank of India. A cut in the repo rate typically translates into lower lending rates for consumers, reducing the overall cost of borrowing.
Despite an unfavorable and challenging external environment, the Indian economy has shown remarkable resilience. It is poised to register high growth. The headroom provided by the inflation outlook has allowed us to remain growth supportive. We will continue to meet the productive requirements of the economy in a proactive manner while ensuring macroeconomic stability.
Since the inflation has been lesser, they've utilized the opportunity. They've utilized this particular situation very well to reduce rates of interest because that has generated a lot of demand and boosted GDP growth.
The rate easing cycle began in February with a 25 basis point cut, bringing the repo rate down to 6.25%, followed by another 25 basis point reduction in April. The biggest relief came in June when the RBI delivered a surprise 50 basis point cut, taking the repo rate to 5.50%. The year ended on a positive note with a final 25 basis point cut in December, which brought the repo rate down to 5.25%. In turn, the banks passed on the benefits to consumers, thereby improving household purchasing power.
Because of lesser rates of interest, consumers in India have been buying cars, two-wheelers, flats, mobiles, appliances, which has increased tax collection, income tax collection, GST collection. It has increased employment opportunities. Income tax collection has been 8% higher. GST collection for November 2025 has been higher than that of last year. So overall, I think it has been an intelligent decision to reduce repo by 1.25% in different stages in 2025. For 2026 also, I expect the repo to be reduced because inflation is expected to be lesser. But the quantum I don't expect to be equivalent to 2025.
Lower interest rates reduced borrowing costs for both consumers and companies. While households benefited from cheaper loans, businesses saw a decline in the cost of capital, which supported investment and overall economic activity. The 2025 rate cut cycle marked the first easing in nearly 5 years. The previous reduction was announced on May 22, 2020, when the RBI cut the repo rate by 40 basis points to 4% during the COVID-19 pandemic. As the year draws to a close, economists note that the RBI's calibrated rate cuts helped strike a balance between robust economic growth and price stability, even as global risks continued to pose challenges for the Indian economy.